On the desk tonight, Tim Seymour, Guy Adami, Dan Nathan, and Chris Ferrone of Strategas, a Baird company. We start off with that rapid and seemingly unrelentless rise in home builders. Lennar, Pulte Group, NVR, D.R. Horton all hitting record highs once again today, and the group has been on a tear all year. Just take a look at some of the gains in the major players. In 2023, far outpacing the S&P and even the tech-heavy NASDAQ. The strength comes even amid all the economic uncertainty. Mortgage rates remain near record highs, and that has helped drive down home prices. The S&P Case-Shiller Index posting its first year-over-year drop in 11 years, and new home sales in May rose 20% from a year ago. So does the current environment support this run that we've seen in the builders, or is this trade on shaky ground? Guy, you're the one who called this trade stupid.
Stupid, this morning on the call. I said with the move we're seeing in Pulte Homes and some of these names, now it's getting a little ridiculous. But collectively, we've been talking about home builders for the better part of the last 9 or 10 months. When people were running from them for fear of a slowdown, we talked about how supply-demand imbalances were still in play. The fundamentals worked. And look at the stocks. Lennar had been the laggard. That just took out its 2021 high from December. Now they're all off to the races. Now, it is getting a little absurd here. I think this is the wrong time to be piling in. I think Dan would probably agree. I'd love to hear what Chris has to say, but if you've enjoyed the ride, you've enjoyed it for the right reasons. These stocks are going higher for fundamental reasons, not just FOMO reasons.
Yeah. Chris, what do you see in the charts here?
Well, I think you can have two distinct views. You can have the secular view that this is leadership and may maintain that for some period of time. But in the short term, we're talking about names that are 25-30% above the 200-day moving average in a market that has regularly punished overbought conditions. So I want to be a little bit mindful of that here. If you're looking for things that are not as stretched, Home Depot, Lowe, Sherwin, actually just starting to turn. So some of the derivatives of the housing play, I think, probably more appropriate from a timing standpoint here.
Yeah, and there's a 10% gap just about between XHB and ITB, showing that sort of difference there.
Yeah, no, listen, I thought it looked a little silly. I think we talked about it a couple days ago. I think today's price action is kind of interesting. It feels a bit like a chase. It definitely feels like this is a month end. This is quarter end. This is something that has worked, and it's been slightly counterintuitive. I mean, that being said, I mean, I think to Chris's point, look at Amasco. It's still down 20% from its 2021 highs, but it does feel like it's trying to put a bottom in here. It's very near its 52-week, highs. I made the point a couple times in the last couple of weeks. The fact that Whirlpool, Masco, some of these stocks weren't keeping up pace with some of the builders, that would kind of lead me to believe that maybe there was like this value trade going into this supply-demand dynamic that Guy was talking about. But there's other things. I mean, look at the XLI. I mean, look at the industrials. They look like they're about to break out. So for all those folks who, been in the broadening out camp, it's not just this AI thing. There are some things to chew on. I'm not exactly one of them yet. No.
I got all excited.
I have to acknowledge. I mean, listen, I've been wrong about plenty of things, and we just kind of try to call it like we see them, but I'm not going to fight this sort of stuff.
Yeah, I mean, and I guess that's the key, Tim. I mean, this is part of, one of the trades this year that has worked. And in spite of all the reasons to not like it, it's still working. And so you jump on it. But do you jump on it? That's the question.
Well, so the guys are talking about some of the other related names in the XHB. So let's take a Whirlpool. So around 150, 155, that's Chris's chart territory. But I'll just tell you, you're kind of breaking through some important resistance. And Whirlpool, which was so badly punished when there was a lot of demand during COVID for appliances and for people staying at home and nesting, couldn't deliver on the products. Major supply chain, major costs and margin headwinds. Now, they were a 30+% market share company going into COVID. They went down to low 20s, and the stock was punished for it. They're back to high 20s. They're seeing margin improvement. So I like Whirlpool here. I think people that are pushing back on the housing sector are right to do that as well. I mean, the supply side of it, we do this all the time. Diana Olick gives us this data all the time. 2.6 months supply means that there's going to be a bid even in a rising rate environment, even for people that don't want to leave a mortgage. And then you have people like Lennar who said, a week ago or so on their numbers that they feel like they're filling a void in terms of the spec market. People that just want to, and again, many cases, these are first-time buyers. So I think that today's housing data is a bit of a head fake. Like, people are relieved that it was that the actual housing prices are down small year over year, and they're like, wow, this should be great. Watch that trend, because year over year prices were up 20. They're coming down, and the momentum here on a chart like this doesn't just stop at zero. I think housing prices, especially in some inflated markets, do have to come down.